Hello, everyone. I'm Reda. I hope you're all enjoying the summit so far. In this session, we're going to do something a little bit different. Welcome to Analyst versus Analyst, where we take a big investing theme and pressure test it from two opposing angles. In this round, the topic is gold versus Bitcoin, and I'll be taking the side of Bitcoin. Probably not the best timing right now, I understand, but let's go. Across from me is my brilliant colleague Russell, who'll be flying the flag for gold. We're each going to lay out the strongest possible case for our corner, the history, the data, the risks, the potential, and yes, we'll try to land a few friendly punches along the way. But before we dive in, a quick disclaimer. This is a demonstrative exercise. We're stepping into these roles to explore the arguments, not to express our personal convictions. In reality, we both believe in balanced and well-diversified portfolios. Think of this as intellectual sparring, not investment instructions. All right, gloves are on. Let's get into it. Russell, please go ahead and tell us why you think, gold deserves a big seat at the table at the expense of Bitcoin.
Hey, Rennie, gold so much better than Bitcoin right now. Super excited by it. Look at this year's performance, 60% plus sort of so far, and Bitcoin, I think, is in negative territory. Anyway, for gold, look, historically, gold's always tended to attract flows at times of war, geopolitical stress, recessions, and periods when stocks and bonds struggle, often holding or gaining value when traditional havens wobble. Its low and often negative correlation to major asset classes means a modest allocation can materially improve risk-adjusted portfolio returns and cushion those drawdowns. And as I just mentioned, gold's up 62% this year, so that's a pretty good starting point. So Reda, what do you reckon on Bitcoin right now?
Right. I mean, I hear all your arguments, Russell, but I think some of the things you said is perhaps what make me favor Bitcoin a little bit more than gold at the moment. So, for example, you rightfully said, gold is up, around 60% this year. Bitcoin is down 8%. So perhaps there's better relative value in Bitcoin versus gold. And actually, if you compare the market capitalizations of the two, gold is hovering at around 30 trillion and Bitcoin at about 2 trillion. And actually, I did this, thought experiment. I was digging into JP Morgan's, valuation framework essentially for Bitcoin, where they compare, the market cap of all gold held for investment purposes. And then they compare that to Bitcoin. And then they do an adjustment, factoring in the fact that Bitcoin is, let's face it, a lot more volatile than gold. But even after all those adjustments, you still end up with, a fair value, if you can say that, for Bitcoin that is significantly higher than gold. Also, there's one thing not captured in that framework, which is the fact that, Bitcoin arguably has a bit more utility than gold. You can basically use Bitcoin as a form of payment. You can use it as a form of money transfer. You can use it as collateral to borrow for things and so on and so on. And then second of all, if you look at the supply dynamics of, gold versus Bitcoin. So if you look at, the maximum theoretical increase in supply between the two, as well as the annual growth in supply, well, supply in Bitcoin is, much less capped. We know there's only going to be 21 million, mined by 2100 versus I think something like 19 million today. And if you look at the annual growth rate, it's also much, much lower than gold. So I think on a, relative value basis, considering how, poorly Bitcoin has done this year, how spectacularly gold has done this year, I think there could be some, more relative value in Bitcoin versus gold. Now, I just want to say, of the two, for me in my portfolio, I own both. And I think every investor should have a little allocation in both. So it's not about one versus another, but perhaps one where, the outlook is a bit more attractive. And one final thing, you'd mentioned historical returns. Interestingly, if you look at gold over the past 2 centuries, I believe, it delivered a real return, real average annual return of 0.4% per year. So barely kept up with inflation. Perhaps that's the point, right? Holding its value in real terms over centuries. However, if you look at the past 25 years, it's done spectacularly. It's actually delivered something like above 7% real return over the past 25 years. Gold has been a phenomenal investment. I won't argue with that. But my question to you, Russell, is, do you think the next 25 years can be as good as the previous 25 years for gold?
That's a tough question to answer. There's a lot can happen in 25 years right now. I think the main point that I've got for gold, at least for the next 1 to 2 years, is the new dominant buyer that's coming to the market, and that's central banks. And that's sticky money, they're large buyers, and it's picked up in a new trend. And the good news is with central banks, it's very unlikely that they're going to switch to suddenly become sellers. And that to me is probably the most important thing. Momentum mean reversion paying up for gold up at $4,200. It does feel like after it's up 60%, it is a bit concerning. Yeah, look, it's done so well. But as I said, if these central banks continue to buy, I think in September, South Korea's central bank said, oh, we're going to start buying gold as a reserve asset. Yeah, it's like, seriously, up here? Yeah, but if they're doing it and all the other banks are doing it, then, it can carry on going. And I think it's really important to understand the key reasons why central banks have suddenly turned big buyers of gold. And that's because of so-called financial weaponization. Russian assets got frozen off the invaded Ukraine. And suddenly all these other central banks are going, wow, we don't want to hold all these US treasuries all the time because, what happens if something happens and the US decides to freeze out? So where we see increased geopolitical risks and sort of other concerns like that, holding physical gold in your own domain with all that background of that history of track record over, 25 years return, that's what I think they're thinking about. And, anyway, so that's kind of like one of the biggest reasons. On top of that, you've got the other one that might be more regular investors will be looking at, inflation's high at 3%, but they're still cutting interest rates and, debt levels of all these central banks, including the US, are so high. Fiscal responsibilities out there. There's a lot of movement there on that side that are getting normal investors like you and me maybe thinking, hey, shoot, we need a little bit of gold here, but we need something to kind of protect our real buying assets. Now, Bitcoin may do that, but if you have to kind of encompass a 40% drawdown, like maybe we've sort of seen, or if not more, since the peak over the last few months, I get what you're saying. It can be there and you're holding 25-year period, so it's there, but it's always hard to stomach when you look at your portfolio and you kind of go, gosh, this thing's down so much. What am I going to do? Do I really believe in it? And yeah, I kind of do. I own gold and Bitcoin too. So, but actually the gold's now a bigger percentage than the Bitcoin just because of the strong performance. So there, anyway. Yeah, and there's one thing that's kind of been bugging me recently about Bitcoin is like the threat of quantum computing. And I don't know, when the first headlines came out, there was a bit of something about it. But the timing kind of half coincides with like the sell-off in Bitcoin. And I'm just wondering whether that could be something. To be honest, I don't get it all. But I just, when you hear something big and major, when you start to see things happen that basically, I don't think most people expected. So therefore, is that a possibility? Any thoughts on that?
I mean, I don't think necessarily that was perhaps the reason behind the sell-off. I think if you look at what's happened the past few months, well, let's say mainly past month, right? You got tech reversing, a lot of AI names reversing. And yes, I said, Bitcoin can be digital gold, but also a lot of the times it also trades in line with tech. I think the fears about quantum computing and so on being able, let's say, to hack the blockchain, it's something, definitely we should be thinking about. But 3 kind of things to push back on over there. First of all, we don't know for sure if, we have a quantum computer, you can super easily hack the Bitcoin network, the entire blockchain. We don't know that for sure. Second of all, let's say for the sake of argument that, some hackers somehow manage to get their hands on a quantum computer and start to hack the Bitcoin network. The thing is, like, the way it would work, if you think about it, is as soon as news breaks out, right, that the Bitcoin network has been hacked, Bitcoin will probably go to zero. And these hackers are going to end up with, lots of Bitcoins are worth potentially zero. So it creates this kind of weird defense, if you think about it, to kind of defend people hacking the network, in the sense that if you completely hack the network and you modify the blockchain and you wire all the Bitcoins to your wallet, well, probably you're going to end up stealing something worth zero, because everyone's going to either dump their Bitcoins or they're going to find their Bitcoins are stolen, and you're going to hog up all the supply. No one's going to buy it off you, and you're going to end up with something worth zero. So perhaps there's this weird game theory element that will prevent someone completely hacking the Bitcoin blockchain network. Third of all, if this becomes a reality and people are using quantum computers to hack, let's say the Bitcoin network, well, what does it say about the rest of your assets, Russell, right? What about your stocks in your brokerage account? What about your bank account, right? These will also be very susceptible to hacking through a quantum computer. Perhaps actually, if you think about it, maybe perhaps the Bitcoin network is, more defensible, relative to facing these hackers than your bank, for example. So yes, perhaps, people will hack, the Bitcoin network, and that's, a bear case for Bitcoin. But I can also say that's probably a bear case for stocks, cash, and a lot of other things. Perhaps not for gold kept under the mattress, though. So I will give you that, Russell.
Fair enough. Yeah, look, I'm kind of with you that quantum could be a threat for everything and everyone. It does make you worried if that's the case. But I just want one thing on that line, that if Bitcoin could really go to zero and the bull's talking about it, that's a bit of a concern that if it's a possible threat. Anyway,
well, if the whole blockchain is completely hacked, but we are talking about a very, very, very low probability thing at the moment. I hope, at least.
Me too.
Well, on that note, thank you very much, Russell.
Thanks, Reda.